Nifty faces a critical breakdown level today, with global trade tariffs looming. Will DIIs hold the line? Welcome to Trade Vision Pre-Market Report. Good morning, traders. Welcome to Trade Vision Pre-Market Report. Today, 2026, July 27th, Monday, promises another vibrant, warm, and positively charged day to conquer the markets. Let us deep dive into the detailed reports. The Trump administration initiated new Section 301 tariffs on 60 economies, including a 10% levy on India effective July 24th, citing forced labor concerns. This move, replacing expiring global duties, introduces renewed trade friction, potentially weighing on Indian export-oriented sectors like textiles and manufacturing by increasing input costs or reducing demand for Indian goods in the US, thereby impacting broader market sentiment. Japan's June CPI accelerated to 1.7%, with core inflation at 1.6%, bolstering expectations for further Bank of Japan rate hikes. This comes as the yen hit a 39.5-year low against the dollar, potentially drawing global capital flows. For Indian markets, a tighter BOJ policy could lead to shifts in risk appetite for emerging markets, keeping the focus on currency stability and capital account balances. A mutual pause in US and Iranian military strikes on July 26th has reportedly led to a 7.7% drop in European natural gas prices, temporarily easing fears over Strait of Hormuz disruptions. This de-escalation could lend support to India's inflation outlook by mitigating imported energy costs, potentially easing pressure on the Reserve Bank of India and favoring energy-intensive sectors like manufacturing and chemicals. The United States has imposed new 10% tariffs on various Indian imports under new trade measures, citing concerns over forced labor, prompting India to confirm ongoing engagement with Washington to secure a bilateral trade agreement. This move, while less severe than previously proposed, puts the spotlight on export-oriented sectors, particularly textiles, and could weigh on market sentiment for companies with significant US export exposure. Odisha has commenced land acquisition for Indian Oil Corporation's ambitious 61,077 crore rupee plant in Paradeep, signaling significant progress for this major industrial development. This substantial capital outlay by a public sector energy giant may lend support to the infrastructure and industrial manufacturing sectors, keeping the spotlight on companies involved in large-scale construction and energy projects. A joint report by CII and Boston Consulting Group forecasts capital expenditure across mining and construction equipment-linked sectors to surge to 9 to 10 lakh crore by 2030, up from 5.5 lakh crore in 2025. This long-term growth projection could lend significant support to the capital goods and infrastructure development sectors, leaving room for a positive tilt for related manufacturing and engineering firms. Iranian forces intercepted 6 vessels attempting to transit the Strait of Hormuz in the last 24 hours, following heightened tensions and reported renewed US military operations targeting Iranian energy infrastructure despite earlier talks of a pause. This escalation in the critical choke point puts the spotlight on global oil supply chains and may lend support to crude prices, potentially weighing on Indian import costs and inflation expectations, particularly for energy-dependent sectors. Adani Power reported a robust 47% surge in its first quarter net profit, indicating strong operational performance amidst rising power demand. This significant earnings beat keeps the spotlight on the broader power generation sector, potentially lending support to related infrastructure and energy stocks as investors gauge growth trajectory and its implications for utilities.
You are watching Trade Vision! Smash that subscribe and enable Like and share this video. Comment your love and share your happiness. Let's win together.
Foreign investors sold 3,892.77 crore rupees from Indian markets. However, domestic institutions bought a strong 5,453.55 crore rupees. This domestic buying should help stabilize the market today, absorbing the foreign outflows. If we look at yesterday's sectoral data, we saw money flowing into Nifty Media, up 1.86% yesterday, and Nifty FMCG, which held steady. Conversely, capital moved out of Nifty Realty, down 0.55% with significant weekly momentum loss, and Nifty Oil and Gas. This indicates a clear rotation, suggesting traders reposition towards consumer-centric and defensive plays today. Let us look at global events. India's Consumer Price Index for June 2026, released on July 13th, came in at 4.38% year-on-year, beating the forecast of 4.30%. This higher inflation could lead the Reserve Bank of India to maintain a hawkish stance, potentially impacting interest rate sensitives. The United States Consumer Price Index for June 2026, released on July 14th, showed a 3.8% year-on-year increase, lower than the previous month. This cooling inflation could ease Federal Reserve hawkishness, potentially leading to increased foreign investment into Indian equities. China's Consumer Price Index for June 2026, released on July 9th, increased by 1.0% year-on-year, missing the 1.1% forecast. This signals weak domestic demand in China, which could negatively impact Indian exports and commodity-linked sectors due to slower global trade. The Reserve Bank of India's Monetary Policy Committee will meet from August 3rd to 5th, 2026, with the decision expected on August 5th around 10 a.m. Indian Standard Time. The U.S. Federal Reserve's FOMC meeting is scheduled for July 28th and 29th, 2026, with the rate decision expected on July 29th at 11:30 p.m. Indian Standard Time. Global markets are mixed. Europe rallied, with the DAX up over 1.3%. Asia broadly declined, led by Taiwan's sharp 2.6% fall. US futures are mixed. India's Gift Nifty gained, suggesting a selective session ahead for traders. Bharat Electronics is in focus today as it is slated to announce its first quarter fiscal year 27 results. Wipro Limited will trade ex-dividend today, offering an interim dividend of 2 rupees per share. Also trading ex-dividend is DLF Limited, with shareholders eligible for an 8 rupees per share payout. REC Limited recently reported a strong 23% sequential rise in net profit for the first quarter of fiscal year 27. Finally, Nestle India is also drawing attention following robust first quarter fiscal year 27 results, seeing total sales grow by over 25% along with a special dividend declaration. Let's check what the RAS levels are saying for Nifty today. The breakout level to watch is 23,727, while a breakdown below 23,705 would be significant. If we see bullish momentum, resistances are at 23,807, 23,887, and 23,968. Conversely, if the market falls, supports are poised at 23,625, 23,545, and 23,464. Today's CPR levels see the top at 23,750, the pivot at 23,732, and the bottom at 23,715. Analyzing the options matrix and derivative distribution, we observe a significant recalibration towards the 2026 July 28 expiry, evidenced by the max pain anchoring at 23,900, a notable 100-point downward shift from prior session's 24,000. This, coupled with the put-call ratio surging to 0.808 from 0.653, signals aggressive put writing and short covering activity, reinforcing a range-bound directional bias for Nifty around 23,700. Institutional demand appears robust at 23,000, while supply is concentrated at 25,000, outlining precise breakout and breakdown boundaries for the immediate term. India VIX closed at 14.03, rising by a 4.08% from its previous close of 13.48. This increase in VIX at higher market levels acts as a caution flag, suggesting increased volatility and potential for a Nifty fall. The 5-day trend for VIX is mixed. The CPR is positioned at TC 23,750, Pivot 23,732, BC 23,715, expecting normal movements in the market today. Gift Nifty opened at 23,920, representing a 92 points gap up from Nifty's previous close of 23,828. This indicates a strong positive start, and Nifty 50 is likely to track this gap up at open, suggesting a bullish start to the session. The no-trade sideways zone for Nifty is between 23,705 and 23,727, where trading directionally is largely unproductive. A move above the breakout level of 23,727 could yield 213 points upside, reaching 23,940. Conversely, a move below the breakdown level of 23,705 could yield 110 points downside, reaching 23,595. Previous trading day, Nifty moved 101 points, which was bullish. The weekly move stands at minus 423 points, and the monthly move is minus 130 points. The close did not sit tight against either extreme, indicating no strong directional carryover signal into today's session. Time now for our final verdict on today's session. Despite Nifty's prior day close showing a 0.43% decline, key indices like Nifty and Sensex are signaling bullish undertones by closing above their breakout levels. Nifty futures trading at 23,830 show a bullish bias with a 62.55-point premium over the spot, even with a short covering signal. Globally, a strong 92-point Gift Nifty gap up and positive European markets are providing a buffer against weaker Asian cues. Crucially, domestic institutional investors continue to show strong support, buying 5,453.55 crore, effectively absorbing the foreign institutional selling of 3,892.77 crore. However, we must advise caution. The India VIX has risen by 4.08% to 14.03, and all major indices, including Nifty and Sensex, are currently trading below their RAS EMA, signaling a bearish trend. Nifty's options positioning with a PCR of 0.808 indicates a range-bound bias with strong resistance at 24,000 and 25,000. Additionally, Nifty's stock breadth is bearish, with 33 of its 50 constituents declining, and negative macro news like India's CPI and US tariffs are weighing on sentiment. Considering all these factors, particularly the strong domestic buying and the bullish Gift Nifty, but offset by bearish technicals and options positioning, we anticipate a mixed to cautiously optimistic opening. We expect Nifty to remain range-bound, with potential for minor upside if it can sustain above the breakout level of 23,726.70. And that wraps up today's Trade Vision pre-market report. Please subscribe and hit the bell for daily updates. If you found this useful, give us a like and share it with your network. We'd love to read your comments and advice below. Have a truly profitable day ahead, everyone.